When you think of Fraport, Frankfurt Airport probably comes to mind, right? One of the biggest, busiest hubs on the entire planet. But Fraport is so much more than that. It's a global airport empire. And right now, it's at a really fascinating crossroads. You've got this story of soaring international success clashing with some pretty serious trouble back home. So if you're an investor, this is the big question. Is Fraport a company that's about to take off, or is it just carrying way too much baggage? So here's how we're going to break it all down. First, we'll get a sense of just how big Fraport's empire really is. Then, we'll look at the bull case, all the reasons for optimism. After that, we'll dig into the bear case, the headwinds in Germany. We'll also cover the company's massive bet on Terminal 3, and then we'll wrap up with the one question every investor really has to answer for themselves. All right, let's start with the empire itself. Because while Frankfurt is a name everyone knows, the real story of Fraport's business, well, it might just surprise you. Okay, so Fraport's business is really split into four main parts. But here's the kicker, the most important takeaway from this chart. Their biggest revenue driver, making up almost 43% of the total, isn't actually Frankfurt Airport. It's their portfolio of international airports. And this split, this division between home and abroad, is absolutely central to the whole investment story. And when we say international, we mean it. This business is huge. Fraport isn't just a German company. They operate 29 airports all across the globe. We're talking high-growth tourist spots in Greece and Turkey, and even emerging economic hubs like Lima, Peru. This gives them some incredible diversification. But of course, let's not forget the crown jewel. Frankfurt Airport is still the heart of the whole operation. And its biggest strength? Unbeatable connectivity. With 300 direct destinations, it offers more connections than any other airport in the world. That's a massive, massive strategic advantage. Okay, so with that lay of the land, let's build the bull case. Why are some investors getting really optimistic about Fraport's future? Well, it all comes down to that powerful global growth engine. And this slide right here tells you almost everything you need to know. It is truly a tale of two recoveries. On one side, you have Fraport's international airports, and they are absolutely booming. Passenger numbers are already higher than they were before the pandemic. But back home in Frankfurt, they're still playing catch-up, not even at 90% of their 2019 traffic. This contrast is everything. Now, this growth isn't just about passengers. It's about the bottom line. If we look at EBITDA, which is a great way to measure profitability, that international segment is the undisputed champ. It contributes more to the company's earnings than any other part of the business. The global strategy is clearly paying off. This international strength isn't just some accident. It's completely by design. The strategy is smart. They combine those hot tourist spots in Greece and Turkey with exposure to up-and-coming economies, like Peru. And crucially, they lock in stable earnings with long-term contracts, which creates a really powerful buffer against any volatility back home. But for every bull argument, there's always a bear case. And for Fraport, the big headwinds are blowing straight out of its home market in Germany. And hey, you don't have to take my word for it. This quote comes directly from Fraport's own management. They're openly saying that the high cost of doing business in Germany puts them at a major competitive disadvantage compared to other big European hubs. So what does that look like in the real world? Well, here you go. Aviation taxes have absolutely skyrocketed. This makes Germany a much more expensive place for airlines to operate and for people to fly from. When you're competing with hubs in Paris, Amsterdam, or Istanbul, every single euro counts. This is a big structural problem. So all these high costs have a very real, very painful financial impact. Just look at the ground handling segment, the part of the business that handles baggage and moves planes around. It lost nearly 82 million euros in a single year. It's this persistent, structural drag on the company's overall profits. And then there's the debt. If you're an investor, this slide is a really big deal. Since 2019, Fraport's net debt has more than doubled, climbing from around 4 billion to a staggering 8.4 billion euros. That is a huge burden that has to be dealt with, one way or another. So why on earth did they take on all that debt? Well, that brings us to the single biggest factor in Fraport's future, the company's massive multi-billion euro bet on Terminal 3. You can think of the T3 investment story as a three-step process. First, you have to spend an enormous amount of money. We're talking up to 4 billion euros. Second, while you're spending all that cash, your free cash flow goes way into the red. But the third step, that's the payoff. When it opens in 2026, it adds capacity for 19 million more passengers, becoming a powerful new engine for growth. And that's the whole game plan right there. The entire strategy hinges on flipping this one switch. They have to transition from burning through cash to build this thing to generating a flood of new cash once it's open. Only then can they start tackling that mountain of debt and, importantly for investors, bring back dividends. So, after looking at the global growth, the German drag, and this huge bet on Terminal 3, we finally arrive at the ultimate question for any potential investor. Okay, here it is, the final trade-off, laid out side by side. On one hand, you have these powerful growth engines, that dominant international business, and the future potential of T3. But on the other hand, you have these heavy anchors weighing it all down, a staggering debt load, and a really tough market in Germany. And that's what it all boils down to. At the end of the day, it's about this single question. Can that powerful growth from outside Germany and the promise of Terminal 3 generate enough lift to get this company and its stock price flying high? Or will the sheer weight of its debt and its domestic problems keep it stuck on the tarmac? That's the billion-dollar trade-off you have to weigh.